Hello and welcome back to the channel. Today we're talking about a possibly controversial topic. I'm not sure. Living at home, especially for younger professionals or those freshly out of college or school, and how that can save you a ton of money, but also discussing some of the pros and cons associated with that. And before I get into this, I do want to note that everyone's situation is a little bit different depending on where you're coming from, your relationship with your family, where you live, what job you have. All of that stuff contributes to some of the scenarios that I will discuss, but I'm trying to keep this more general and as an option for you to consider if some or all of these things may apply to you. So if you have any thoughts, as always, let me know down in the comments section, but let's get into it. So for this video, I kind of looked up the average or median income statistics for a lot of these categories, so I'm going off of that. But in the US, the average income for a college graduate is about $50,000. Once again, this will vary based on what industry you're working with the median income for something such as professional services, banking, finance, STEM being a little bit higher. But on average, let's assume that you're making $50,000 a year. And also, just for the sake of this example, assume that you pay around $10,000 in taxes. This is a little bit on the higher end. I estimated this taking into account high state taxes in California, but a lot of states have significantly lower state taxes, as well as some states having no state tax. And also, this isn't taking into consideration any deductions that you may have from retirement contributions, health plans, or charitable contributions, business deductions, anything like that. We're just talking about straight up income tax. So you make $50,000, another $10,000 taken away by taxes. So effectively, you're taking away $40,000 per year after taxes. This is the money that actually makes its way into your bank account and money that you have to spend. So now it's more time for a budget example and a walkthrough. From that $40,000, let's assume that the average rent in the US is about $1,500 for an apartment. Once again, this will vary if you have roommates or if you live in certain cities or areas. This could be higher or lower, but for the sake of argument, $1,500 a month on rent. So $1,500, 12 months, you're paying about $22,000 in rent. So your original $40,000, pay off $22,000 in rent. And let's also estimate you're paying around $150 per month in utilities. So this will be your electricity, water, gas, sewage, trash, internet, anything else associated with that. $150 a month, 12 months gets you to about $1,800. Make that $2,000 a year on utilities. So after the $40,000 take-home pay, $22,000 in rent, $2,000 in utilities. So you have $40,000 take-home pay, spending about $24,000 on rent and utilities, not including any insurance that you might have to get. You're down to about $16,000 now after all of that. So we started at $50,000, cut that to $40,000, and now we're at $16,000 after things that you pretty much have to spend your money on. But here I'm not even taking into account groceries or insurance or cell phone bills, other necessities that you might possibly need as well. So what seemed like a lot of money has now been cut down significantly. And to just run through some other examples of what your money would go towards, let's also assume that you're trying to save up money for retirement and to build up your emergency savings. Maybe you didn't come out of college with a large savings, or you also have to pay down your student debt. So assuming 20% savings is about another $10,000 out of that $50,000. So that will cut in to your $16,000. I mentioned student loans. So if you have to make loan payments, that will also take a significant cut of that extra money that you have. And after that, we're thinking about groceries. So $150 to $300 a month on groceries is pretty typical if you want to go eat out. About $100 a month isn't too unreasonable. And you also have your cell phone bills, your insurance bills, things that you want to buy for yourself, gifts that you need to buy, donations that you might need to make, Netflix, Spotify, Disney Plus, all that good stuff takes another hit out of that $16,000 that we have left to play with. So after all that, we're thinking we actually don't have too much money in our bank accounts at the end of the day. So now let's talk about living at home for young adults. The first thing I would try to compare this to was maybe living at home for college. A lot of the times going to school, going to college is for the experience as much as it is for the academics and the learning. So for a lot of people, you can really save a lot of money through school if you're living at home or you're not living on campus, because sometimes the cost of living can be more than tuition itself. But now we're a little older, maybe we've graduated 4 years, we're in our early 20s, onto our first job. Can we still go home? If the circumstances are right for you, I think this is definitely something you can consider, even if it's not for an extended period. For example, now during the quarantine and shutdown orders, most offices have been shut down for about 4 months now. So if you are in a position where you can work remote or you can work from home, consider moving back in or getting a cheaper place further away from the office that can save you some extra money. Let's look at the financials of moving back home. So before we said that after taxes, after rent, we're left with about $16,000. So if we assume that we go back home, we're living either completely rent-free or for pennies on the dollar to what we would be paying renting a place of our own, we suddenly get that $24,000 of rent and utility back. So we're back up to $40,000 now, right? That's over 100% increase in the amount of money that we have to spend every month. And think of this as giving yourself a raise, right? What is a raise? Every year we get our performance reviews. Your boss sits down, talks to you about how you've done, and presents to you a raise, if any. This can be anywhere from 2 to 5% or even more if we're lucky. But this is the extra money that we see from our paychecks, our salary every week. But things such as rent and utilities are things that we can't really get out of paying if we're renting a place on our own. So at the end of the day, we're really looking at that number, the number and dollar figure left behind after all of those set and fixed expenses. That's the money we really have to spend on whatever we really feel like, if it's going out or going to concerts, going to events, or to savings. That's the money that we have to play around with. Rent we can't really control, but this money we do. So now by reducing your rent, which is a majority of our expenses for a lot of people just earning the median income, we can essentially see that as a raise for ourselves, a nice bonus. Every single paycheck that comes in where you're not sending it off to the landlord is going straight into your pockets. It's going into your bank account. You're paying yourself. And normally we would say that maybe if we're living at home, it might be a little further from work. We might not be as close to our friends or our colleagues or the connections that we need to be making in order to build our careers, to advance in our careers. But the argument now is things are shut down anyways. People are working from home. You're not having those events or the happy hours or the dinners anyways. So you might as well stay somewhere cheaper where you can save up money and build up your savings. Now, I said earlier, this won't really apply to everyone. Each person's situation is unique. Maybe you really don't want to be at home for another year. You really do want to get out there. Or you're living with someone else. You're already into a lease that you can't get out of. Or you have some really awesome roommates that you want to live with. And that's fine. But I think this is a case where we could think about going home. And even if it's not moving out completely and going home for the foreseeable future, if you're able to get out of a lease or move back home for just a couple months, just think about all that money that's going straight into your bank account. And especially for younger professionals, young adults, and college students who are just graduating, we probably don't have a ton of savings built up, or we have student debt that we have to pay off. So even if you're able to live at home for half a year, 6 months, or just 1 year, that's still $20,000 to $30,000 extra dollars in your pocket just for that time period. Right? Think about coming out of college. I have $0 in my bank account. I stay home for 6 months. After that, suddenly I'm at $20,000 in my bank account. And after the quarantine ends, maybe I move back out, go back to my city, start paying rent again, but I still have that savings built up. Or think about if you have student loans, you're coming out with $100,000 in loans. You're able to take 6 months of not paying rent. That's $20,000 towards those loans. You're 20% of the way there already. So from a purely financial, personal finance aspect, there could be a case to be made to think about, right, lowering the cost of living. And despite what some people might say, there's really no shame in living at home, living in your parents' basement, as some would say. So the next time someone teases you about living in your parents' garage, just show them your bank account. That extra $20,000 parked in your bank account, cold hard cash, and see who's laughing after that. I know for me, I had an apartment. It was awesome. Living close to the office, no real commute. But now all that extra money straight to my bank account. Such a good feeling to have a ton of extra money. I can just spend it on whatever I want now, increase my savings, right? Increase my retirement contributions. All of that can be done without really giving it much thought. So this is kind of just an exercise to think of what you would do with $20,000 a year extra, right? That's way more than enough to go on a nice vacation. Or if you want to take a weekend trip, $300 plane ticket, that's actually not bad as long as it's not going towards rent. Or I want to go to a nicer restaurant, $100 dinner. Wow, what a splurge. That's fine. Right? I'm not giving that to my landlord. I'm spending that on myself. I'm paying myself. I can use it to invest, pay off my loans, anything you want. So to cut to the chase, the point of this video is to think about your budget and think about where you can start saving some money during the pandemic. Things are a little bit different now. We might not need to be spending money in some areas where we may have needed to before, especially with the remote working. If you're able to work virtually, you don't necessarily have to be tied down to any certain area. And some companies that have converted most of their positions to virtual work indefinitely, that also gives you a great chance to get out of those more expensive, larger cities, maybe somewhere a little bit further out, or just somewhere completely different. Save some money, use that money on yourself, whatever you want to spend it on. Thanks for watching. If you thought this was useful, thought this brought up some good ideas, things to think about, be sure to smash that like button. As always, comment down below if you have any comments or questions, any thoughts on living at home, or any other pros or cons you can think about in terms of saving money. And if you're not subscribed to the channel, make sure to hit that subscribe button, hit that notification icon, get notified of all new uploads. But thanks so much for watching. Peace out.